Next difference of books maintained by a non-trading concern is the difference between receipts and payments account and income and expenditure account. What are the differences between receipts and payments account and income and expenditure account? As we know, the receipts and payments account bears a real account balance. So the nature of receipts and payments account is of a real account nature. But as far as an income and expenditure account is concerned, it bears nominal account nature. So receipts and payment account bears a real account nature, and income and expenditure account bears nominal account nature. And the second one is, this receipts and payments account is a summary of cash book. In cash book, all entries are made on chronological way. Here, all entries are made on the basis of items. All subscriptions are grouped in subscriptions head. All admission fees are grouped in admission fees. Likewise, all postings in receipts and payments account is a summary of cash book. But as far as income and expenditure account is concerned, it is like a profit and loss account, because all types of incomes and gains, all types of expenses and losses are posted in income and expenditure account. And the next is the debit side of receipts and payments account. The debit side of receipts and payments account bears receipts, and the debit side of income and expenditure account bears all expenses and losses. The debit side of receipts and payments account bears all receipts. As far as an income and expenditure account is concerned, debit side of income and expenditure account bears expenses and losses, and the credit side of receipts and payments account shows all payments made by the non-trading concern. And here, under income and expenditure account, it bears all incomes and gains. So as far as credit side is concerned, the receipts and payments account shows all payments, but as far as an income and expenditure is concerned, the credit side shows all incomes and gains. And as far as opening balance is concerned, if that particular business concern is a continuing business concern, then there will be opening balance. If the business concern is a continuing business concern, then there will be opening balance. But in income and expenditure account, there will be no opening balance. There will be no opening balance, but in the case of receipts and payments account, there will be opening balance. Next is the period of entry. As far as receipt and payments account concerned, it does not take into account the period of such transaction. That means If there is a payment or receipt belonging to previous year or of current year or of future years, all these will be recorded in receipts and payments account. It does not concern about the period of receipt of such payments. It does not consider the period of receipt as well as period of payment. All types of receipts, all types of receipt, that means all receipts belonging to previous year, current year, future year will be taken into account in receipts and payments account. Likewise, all payments belonging to previous year, all payments belonging to current year, all payments in advance for future years will also be recorded in receipts and payments account. But in the case of income and expenditure account, it shows only current year's expenditures, current year's income, current year's expenditure and current year's income. That means it does not show current year's receipts or current year's payments. It shows only current year's income. It shows only current year's expenditure. And the next is adjustments. In receipts and payments account, there will not be any non-cash entries. All entries will be of either cash payments or payments are made from bank. So only cash transactions, whether it belongs to current year, whether it belongs to previous year, or whether it belongs to coming years, will be shown in receipts and payments account. Only cash transactions will be shown in receipts and payments account. But as far as income and expenditure account is concerned, both cash and non-cash transactions will be shown in income and expenditure account. And next is how the closing balance is dealt with. As far as receipts and payments account is concerned, the balancing figure will be either cash in hand or cash at bank. Whatever be the balance available in receipts and payments account, the same will be brought down or carried forward to the next financial year. But as far as the balance of income and expenditure account is concerned, the balancing figure will be either surplus or deficit. If it is surplus, it will be added to capital account to be shown on the liability side of the balance sheet. And if it is a deficit, the same will be deducted from capital fund account to be shown in the liability side of the balance sheet. These are the difference between receipts and payments account and income and expenditure account. Thank you.